Hello there. This is Tejas from Trendline, and in this video, we'll be looking at the portfolios of four superstar investors and their investment strategies. We'll also analyze how their bets over the past few quarters paid off and portfolio mix changed with respect to sectors. The four portfolios in focus are Rakesh Jhunjhunwala and Associates, Sunil Singhania, Ashish Kacholia, and Dolly Khanna. Continuing its momentum from Q2, the benchmark index Nifty 50 extended its gains in Q3 and rose nearly 6%. However, after hitting its life high on December 1, the Nifty 50 has been volatile and lost nearly 6%. Let's look at how the volatile market affected superstar portfolios. Net worth of these superstars remained flat or fell in Q3 FY23 despite the Nifty 50 rising nearly 6% over the same period. While the public holding value of Rakesh Jhunjhunwala and Associates and Ashish Kacholia remained flat, Sunil Singhania and Dolly Khanna saw their net worth fall. We will look at each superstar's portfolio performance and also analyze their buys and sells. Among the four superstar investors in focus, Rakesh Jhunjhunwala's portfolio is the only one that prefers the large cap space. This portfolio is now managed by Rare Enterprises management team headed by Utpal Sheth and Amit Goela. As of February 13, Jhunjhunwala and Associates public holding value is rupees 32,181 crore. The portfolio value has fallen 2% in just over a month since Q3 ended, mainly due to a sharp share price fall in Star Health and Allied Insurance Company, which contributes to around 17% of the total portfolio value. Textile, apparel, and accessories continue to be the preferred sector in Q3. Other sectors that make up a significant part of the portfolio include banking and finance, retailing, auto and auto components. Rakesh Jhunjhunwala and Associates increased their exposure to retailing and automobiles and auto components in Q3. The team sold around 0.4% of their stake in jewelry company Titan. As a result, textiles, apparel, and accessories sectors' contribution to the total portfolio value fell by 3.5 percentage points. However, Titan still makes up 35% of the total holding value. Due to this disproportionate weight in Titan, any decline in share price will impact the portfolio significantly. The top five stocks in RJ and Associates portfolio remained the same in Q3. Among them, only CRISIL managed to outperform the Nifty 50, while Titan and Star Health and Allied Insurance, which make up over 50% of the total portfolio, fell sharply due to weaker than expected results. Portfolio diversification is quite low as the top five stocks continue contribute to 72% of the total holding value. Notably, Rare Enterprises reduced its holding in three of the top four companies in terms of portfolio contribution. While the team reduced its stake in Titan, Star Health, and Metro Brands, it added a 0.46% stake in Tata Motors. Rakesh Jhunjhunwala's team is classified as a promoter in Star Health and Allied Insurance Company. Among the top four holdings, Metro Brands and Star Health were listed in December 2021. Interestingly, Rare Enterprises had reduced their exposure to the banking sector in Q2 FY23, but in Q3, the team bought back stakes it sold in the banking companies. This could be because of a positive outlook on the banking sector with rising loan demand in the retail and corporate segments amid cooling inflation. Banks quickly passed on the interest rate hikes to customers by increasing interest rates on loans, but were slow in raising the deposit interest rates. However, banks are now increasing their fixed deposit rates, and this could put pressure on the net interest margin or NIM. Notably, all four of these banks' TTM PE is trading lower than their sector and their historical levels. Hence, they are in the PE buy zone according to Trendline. In Q3, RJ and Associates added their stakes in a total of 9 companies. But they reduced its stakes in 11 companies in Q3 while reducing its holding to below 1% in 3. Anantraj, Man Infra Construction, and Orient Cement. The team cut its stake in two IT firms, Nazara Tech and Aptech. Other notable mentions in the sell list include Fortis Healthcare, Indian Hotels Company. Let's now move on to the next superstar investor, Ashish Kacholia. Kacholia maintains a diversified portfolio with his top five stocks contributing to only 26% of the total holding value. His top five holding values are from different sectors, reducing exposure to any single sector. Chemicals and petrochemicals, textiles, apparel and accessories, and consumer durables are his preferred sectors. This superstar investor's net worth remains the same after Q3 FY23. Kacholia has drastically changed his portfolio structure over the past 4 quarters. IT was his sector of choice in both Q4 FY22 and Q1 FY23. But in Q2, the software and services segment made up only 7% of his portfolio. The possible rationale behind this could be muted growth expectations in the IT space. Kacholia has now turned towards chemicals, petrochemicals, and general industrial stocks in Q3. Share prices of three of the top five holdings in his portfolio fell in the past 3 months, led by Finiotex Chemical. However, this loss was sharply offset in his top two holdings, Safari Industries from the textiles, apparel, and accessory segment, and IT company NIIT. Gravita India, which is a metals and mining company, is in close competition with Finiotex Chemical for the fifth spot. Kacholia went on a buying spree in Q3 and added stakes in 11 existing holdings. He also added stakes in four new companies, and all these companies were from different sectors and in the small cap space, in line with his diversification strategy. The chemicals and petrochemical segment stand out here as four companies from this segment feature in the buy list. Kacholia continued to buy shares in chemicals and petrochemical companies like Agawal Industrial Corp, Best Agrolife, and Yasho Industries in Q3. He also increased his stakes in PCBL, which features in his top five holdings. While the superstar investor added or bought new stakes in 15 different companies, he only sold his holdings in four. He slashed his stake to below 1% in SG FinServe and Rainbow Children's Medicare. He also sold a significant number of shares in Hindware Home Innovation and D-Link. Let's look at another superstar who invests in companies that appear underpriced by fundamental analysis, Sunil Singhania. He invests through his company Abacus Asset Management. I will refer to it as Abacus Fund from here on. Abacus Fund has been cutting its stake in the IT sector since Q1 FY23. In Q3, the metals and mining sector overtook the software and services sector and contributed the highest to the portfolio. However, Singhania bet on two companies in the IT sector, Mastech and CMS Infosystems. With a sharp sell-off in the IT sector, Singhania could be eyeing firms that are undervalued in this space. Mastech and Rote Mobile in particular, which feature in the top five holdings, fell in the past quarter. Interestingly, both these companies are from the software and services sector. Jindal Stainless Hisar from the metals and mining industry was the star performer, rising over 50% in the past quarter. This helped Abacus Fund's holdings to rise 6% in the past 3 months alone. The top five holdings contribute to around half of the fund's total holding value. Singhania, through his Abacus fund, added stakes in 9 existing holdings and added investments in two companies, CMS Infosystems and Traction Technologies. He also added stakes in two firms from the IT sector, Mastech and CMS Infosystems. Notably, he had reduced his holdings in these two companies in Q2 FY23. Other mentions in the buy list include Ion Exchange, HG Infra Engineering, and Stylum Industries. Abacus Fund cut its stake in three of its top five holdings, Jindal Hisar Stainless, Route Mobile, and Hindware Home Innovation, and added stakes in the other two, Ion Exchange and Mastech. The superstar investor has also been reducing holdings in the Anup Engineering since Q1 FY23. Abacus Fund decreased its holdings in a total of 6 companies in Q3. Let's now move on to the final superstar investor in focus, Dolly Khanna. Her portfolio is managed by her husband, Rajiv Khanna. The strategy followed by this investor is quite different from what we saw with Singhania. Dolly Khanna is a cautious investor who reacts to market upheaval more than the other investors discussed here, getting in and out of a stock quickly. As the markets were more volatile towards the end of Q3, Khanna sold her stakes in several companies. She mainly invests in small cap stocks and has a concentrated portfolio both in terms of sector and stocks. As a result, the portfolio sector breakdown varies from quarter to quarter. In Q3, oil and gas was her preferred sector. As Dolly Khanna reduced stakes in many companies, the sector breakdown of her portfolio changed vastly from Q2 FY23. Contribution from the oil and gas sector nearly doubled to 35% in Q3, while cement and construction sector's contribution fell 5 percentage points to 14%. The top five companies in her portfolio make up 75% of her total holding value, leading to a very concentrated portfolio. Dolly Khanna added stakes in only three companies in Q3: National Oxygen, Monte Carlo Fashions, and Prakash Pipes. She has been increasing her stake in plastic products manufacturer Prakash Pipes since Q4 FY22. The superstar investor also added investments in Monte Carlo Fashions, which contributes to around 14% of the total portfolio value. Dolly Khanna went on a selling spree in Q3 FY23 and reduced her stake in 18 holdings. She now holds less than 1% stake in seven of those companies. The chemical and petrochemical sector stands out as Khanna reduced her stake to less than 1% in three firms in this sector: Aries Agro, Manali Petrochemicals, and Sharda Cropchem. So, as we saw in the video, these superstar investors have varied interests and follow different investment philosophies that suit them. One common trend was that the superstars net worth of the superstars in focus did not rise in Q3 after a stellar performance in Q2 FY23. This goes to show that consistent returns are hard to achieve, be it for superstar or retail investors. You can find more information regarding these superstar and many more superstars on trendlyne.com. This is Tejas signing off.